everyone, welcome back to Mindful Investing. It's time for our monthly portfolio update. Since yesterday was the last trading day of the month, let's take a look back and review how things are shaping up as we close out September 2025. Portfolio gained 5% in September, which is about $11,800, and overall year to date I'm up $48,000, which works out to a 23.8% gain. Right now I'm holding about $89,000 in cash, which is earning 3.75% APY and waiting for the right opportunities. Now, because of this cash position, it's a little tricky to see the exact amount invested versus current value numbers at a glance. So here's the breakdown. I've invested about $122,000 and the current value of those positions is $159,000. That means I'm sitting on $36,000 in profits, and this doesn't include the swing trades and options we have done this year in names like ASML, Microsoft, Arista Networks, McDonald's, and a few others. Alright, before diving into the portfolio in detail, let's set the stage with a quick look at some macro data that's shaping the market right now. The fear and greed index is currently sitting in the neutral zone because a lot of it has to do with the ongoing government shutdown. Investors are cautious but not panicked. Next, the VIX, also known as the volatility index, is around 16. That's still comfortably below its 200-day EMA, which tells us the market is relatively calm at the moment. In other words, despite the headlines, volatility hasn't spiked. That's actually a good sign. Now, here's something important to note. Historically, government shutdowns haven't been as damaging to the market as people often fear. Let me give you a few examples. In 2013, we had a 16-day shutdown. The S&P 500 actually gained about 3.1% during that period. In 2018 to 2019 shutdown, which was the longest in US history at 35 days, the S&P 500 still ended up rallying more than 10% over that stretch. Since 1976, there had been over 20 shutdowns, and in many cases, markets either held steady or moved higher once funding was restored. So yes, shutdowns create noise and short-term uncertainty, but markets have usually shrugged it off and often bounced back strongly once the dust settled. That's the macro backdrop. Now, with that context in mind, let's shift gears and talk about how my own portfolio is positioned right now. Alright, now let's dive into my portfolio and walk through what I have sold and added this month. The first thing is I bought 15 shares of PayPal at an average price of $69, and right now I'm down about 3% on this position. This is more of a swing trade for me rather than a long-term hold. Technically, PayPal is trading below the 200-day EMA on both the daily and weekly charts, which historically suggests we are near a short-term bottom. But based on the charts, I expect a bounce to above $80, and that's where I plan to exit and lock in profits. I'll be keeping a close eye on volume and momentum indicators to see if the bounce gets stronger. But as of now, $80 is my next target for this swing trade. On the selling side, I did close my ASML trade this month. I sold my shares for a total profit of $1,000, which worked out to a 34% gain in just 2 months. This was a swing trade for me, and when I saw both the daily and weekly RSI in the overbought zone, I felt it was the right time to protect my gains. It doesn't mean ASML can't go higher. It very well could. But for me, locking in those profits and redeploying the capital into other opportunities just made sense. That pretty much sums up the major buys and sells this month. Honestly, I was super busy and probably spent less than 2 hours in total looking at my portfolio. And that right there is the beauty of building a solid portfolio backed by a strong model. I can sleep well at night without stressing about daily market noise. Now, let's talk about my recurring buys. As many of you know, I recently started a 15-year challenge where I invest $50 into SCHG and $50 into IBIT every single week. This is a long-term wealth building strategy, and I'll drop the link to that video in the description below. So if you want to check it out and maybe join me on this journey. For SCHD this month, I invested $250 through automatic purchases. On top of that, I also picked up additional 40 shares at $27. Altogether, I now hold 268 shares worth about $7,300. Currently down about 1%, but I'm not worried at all. SCHD is all about long-term dividend growth and compounding. And for IBIT, I now hold 31 shares at an average price of $56.98, which is up about 14.3%. I also added another $250 worth through recurring buys this month, and I'll continue to accumulate shares over time. So that wraps up my recent purchases and swing trades for the month. Next, let's move into the core of my portfolio, my growth stocks, dividend stocks, and ETFs. I'll show you exactly where I stand today. Now let's move into the most exciting part of my portfolio, which are high growth stocks. These are the backbone of my strategy and companies with strong fundamentals, huge growth runways, and the potential to deliver outsized returns over the long term. And as you'll see, many of them have already given me incredible returns this year. So let's kick it off with one of my top performers, which is Broadcom. I currently hold 111 shares at an average price of $180, and right now I'm up about 81%, which translates to about $16,500 in gains. At one point, when it was pushed to above $370, I was up over 100%. Now it's consolidating a little bit, and that's totally fine with me. According to my model, Broadcom still has a 3x potential upside over the next 5 years. Plus, it pays a dividend, and I collected $65 in dividends in June. On top of that, I've been selling covered calls to generate passive income, and for me, this is a core long term hold. Next up is Vertiv Holdings, which I see as one of the most exciting AI infrastructure plays. I currently have 101 shares at an average price of $84.50, and I'm up over 76%, more than $6,600 in gains. Vertiv builds the cooling and power systems that keep data centers running, and as big tech and hyperscalers pour billions into AI data centers, Vertiv stands to be a huge beneficiary. My model still shows 265% upside in 5 years, so I'm holding this one tightly. Moving along, let's talk about semiconductor equipment. With Lam Research, I hold 109 shares at $74.75, and I'm up 77% on this. In fact, in just 1 month, Lam Research jumped 37%. I think it's because of the institutions are loading up heavily. For example, Tom Lee's Granny Shots ETF alone holds over $86 million worth of shares. This shows that big money is finally recognizing what we saw earlier. Lam Research is a long-term winner for me. And next up is NVDA. Of course, we cannot skip NVDA, which is the king of AI. I currently have 34 shares at an average cost of $123.25, and I'm up 50%. This company continues to dominate AI and data centers, and I'm not planning to trim here. This is a long-term hold for me. I also own 20 shares of AMD at $106, and with the stock now around $161, and I'm up 50%. Solid returns so far, and I still think AMD's positioning in AI and GPUs. Shifting to Amazon, I hold 20 shares with an average cost of $182.76. At today's price around $219, I'm up 13.6%. Not a huge gain yet, but Amazon is a long-term play for me. I'm watching the $200 support level closely. If it dips there, I'll be adding more. I also plan to start selling cash secured puts around the $210 level to generate premium while accumulating shares. Next up is Google. I currently hold 35 shares at an average price of $163.71, and I'm up about 48%. This is a long-term compounder, and I'll happily add more on pullbacks, especially near the 200-day EMA. Let me also show you my losers right now, starting with Chipotle. I currently hold 150 shares at an average price of $46.30, and I'm down about 15%. But my model still shows 113% upside in 5 years, so I'll continue to hold and let this one play out long term. Next up is Trade Desk. I own 42 shares at $62.26, and I'm down 22%. But nothing has changed fundamentally. This company is still a leader in ad tech, and I've been watching the $43 support, and it did respect that level recently. I had a buy order at $43 that which didn't trigger, but I'll continue to average in. Next up is Duolingo. I currently hold 18 shares at $337, which is currently down about 5%. But Duolingo has one of the best balance sheets in my entire portfolio. So I'll keep holding and even average down if it dips more. Next up is Intuitive Surgical. I currently have 16 shares at an average price of $467 and I'm currently down 5%. The next major support is at $392 where the 200-day EMA sits on the weekly chart. That's where I'd love to add more. And next up is Berkshire Hathaway. I currently have 10 shares at an average price of $470 and I'm up about 6%. A safe, steady, long-term hold for me. I'll continue adding if it dips below its 200-day EMA. And next up is Revolve Group. I currently have 50 shares at an average price of $20.50 and I'm up 3.9%. My model shows 128% upside in 5 years and with a strong balance sheet. I believe it can double from here, so I'm holding it tight. Next up is Lululemon. I currently have 20 shares at an average price of $206, which is down 14%. This was an earnings play that didn't go as planned, and I'm holding this for now. Honestly, I wouldn't recommend buying this stock to anyone right now. And finally, I have FICO. I currently have 1.7 shares at $1,467. If it pulls back to around $1,250, that's where the 200-day EMA on the weekly chart is. I'll try to add more. Now let's switch gears a little. While high growth stocks brings excitement, my dividend stocks and ETFs provide stability and consistent cash flow. So far in 2025, I've collected about $2,237 in dividends. In September alone, I received $276 in dividends. The compounding effect is already visible and I expect this number to grow meaningfully by end of next year. So here are my dividend stocks. Starting with Realty Income, I currently have 52 shares at an average price of $54.86 and I'm up 10% on this. This gives a dividend yield of 5.24% and this is one of my favorite monthly dividend stock. Next up is Coca-Cola. I currently have 50 shares at an average price of $63 and I'm up 5%. This is a rock solid dividend player. Next up is LTC Properties. I currently have 100 shares at an average price of $34, which is up 8%. It has a dividend yield of 6.25% and it's a steady healthcare rate. So I'm holding it tight for long term. Next up is Target. I currently have 26 shares at an average price of $109, which I'm down 18%. It does have a dividend yield of 4.63%, but not a huge upside as per my model. I actually plan to exit this and move funds into SCHG. Alright, now let's shift into ETFs. Starting with SCHG, I currently have 321 shares at an average price of $24.88, which I'm up 27%. This is a long-term growth engine for me. Next up is JEPQ, which I currently have 63 shares at an average price of $53.68 and I'm up 6% on this with a yield about 10% and monthly income. This is a dividend beast. So I'll continue to add more if it dips. Next up is AMDY. I currently have 200 shares at an average price of $9.70, which I'm down 21% on this. I've received $700 in dividends, so I'm technically in the green. But I don't like this model. It erodes capital while paying taxable income. I'll try to exit and redeploy into more reliable dividend names. That concludes all my holdings right now in my Robinhood portfolio. So overall, I'm very happy with how my portfolio has shaped up in 2025. It has strong gains from growth stocks, a steadily growing dividend stream, flexibility with a 50% cash position, ready to deploy. And as always, thank you for watching and being a part of the mindful investing journey. And if you got value from this video, please like and subscribe. It really helps push the video to more viewers like you. Now, I'd love to hear from you. What changes would you make to this portfolio to boost performance in the last quarter of the year? Drop your thoughts in the comments below. Thanks for watching and I'll catch you in the next one.